Want to know how to maximize your tax refunds effectively? Well, you've come to the right place. Today, we're diving into the world of tax planning, a topic that might seem complex, but can actually be your secret weapon in optimizing your financial outcomes. By the end of this video, we're confident you'll have a better understanding of how to navigate the tax landscape and how to make it work in your favor. Stay tuned for some easy-to-follow steps that can help you keep more of your hard-earned money. Understanding your tax bracket is the first step towards maximizing your tax refunds. So, what exactly is a tax bracket? It's a range of incomes taxed at a given rate. In the United States, we have a progressive tax system, which means as your income increases, so does your tax rate. Now here's where it gets interesting. Not all of your income is taxed at the same rate. For example, if you fall into the 25% tax bracket, only the income that exceeds the threshold for the lower tax brackets is taxed at 25%. The rest of your income is taxed at the lower rates. So why is knowing your tax bracket important? It's all about planning. If you know your tax bracket, you can make informed decisions about things like when to take deductions or whether to defer income. Knowing your tax bracket allows you to plan your finances effectively and can lead to larger tax refunds. Deductions, credits, and exemptions can significantly reduce your tax liability, leading to larger refunds. Let's start with deductions. Deductions are expenses subtracted from your income before it's subjected to taxation. They lower your taxable income, reducing the amount of tax you owe. Examples include mortgage interest, student loan interest, and charitable contributions. Next, we have tax credits. Unlike deductions, which lower your taxable income, tax credits directly reduce the amount of tax you owe, dollar for dollar. For instance, the child tax credit provides a credit for each qualifying child under 17. Then there's the earned income tax credit, a benefit for working people with low to moderate income. Lastly, let's talk about exemptions. Exemptions are similar to deductions in that they lower your taxable income. However, they're typically based on the type of taxpayer you are and the number of dependents you have. For instance, under certain conditions you may claim an exemption for yourself, your spouse, or your dependents. It's important to remember that every person's tax situation is unique, and what works for one may not work for another. Be sure to consult a tax professional to ensure you're taking full advantage of the deductions, credits, and exemptions applicable to your situation. Taking advantage of all the deductions, credits, and exemptions you're eligible for can greatly increase your tax refund. Effective tax planning is key to maximizing your tax refunds. Let's unpack that a little. Imagine you're on a journey, your destination, financial growth, and prosperity. Now, tax planning is like your GPS. It not only guides you but also helps you avoid any pitfalls and roadblocks, ensuring you reach your destination efficiently. In the complex world of taxes, it's easy to stumble into common pitfalls. You could be paying more tax than necessary or missing out on beneficial deductions and credits. That's where tax planning comes into play. It's your roadmap to navigate the maze of tax codes, helping you make informed decisions that optimize your financial outcomes. Now let's talk tax-efficient investing. This strategy involves making investment decisions that can lower your tax liability. It's not just about what investments you make, but when and how you make them. For instance, holding on to investments for at least a year can qualify you for long-term capital gains rates, which are generally lower than short-term rates. Tax planning also helps you prepare for the future. It's not just about this year's tax return, it's about laying the groundwork for a prosperous financial future. It's about aligning your financial goals with your tax strategies. So whether you're saving for your dream house, planning for retirement, or simply want to keep more of your hard-earned money, tax planning can be your best ally. Remember, proactive tax planning can help you maximize your tax refunds and achieve your financial goals. Maximizing your tax refunds doesn't have to be complex or overwhelming. By understanding your tax bracket, you can plan strategically. Utilizing deductions, credits, and exemptions can help you keep more of your hard-earned money. Effective tax planning is a powerful tool in optimizing your financial outcomes. Remember, knowledge is power, and in this case, it can also mean more money in your pocket. Thank you for watching. If you found this video helpful, please give it a thumbs up and subscribe to Wise Wallet Wisdom for more financial wisdom. Remember, a wise wallet makes for a wise life.